Good afternoon, welcome to the Market Wrap for week ending the 14th of May 2021. Stuart Williamson here at the helm. Now today, what are we going to talk about? We're going to talk about what's going on in the market in the UK. Where are we? Are we at the start of a boom, start of a bust? And the 18-year housing cycle. How does all this fit into it? Okay, very briefly look at where we are in the market. We've got some figures from the ONS, which show that we're at a 16-year high in house price sales, highest volume ever since the beginning of figures were taken. 8.6% year to end in February 2021 rise, evenly spread over all the countries without London leading the way. 4.6% rise in London, in the northwest 11.9%. Pretty huge figures compared to what we thought a year ago what was going to happen. Looking at home track, and looking at major cities, we've got Manchester up by 6.6%, Liverpool 6.4%, Leeds 5.4%, Nottingham 5.3%, and Sheffield, Leicester 5%. So that's where we're at the moment. Now, I've had quite a few people coming to me this week and saying, okay, because I think a lot of expatriates, international investors are fairly out of touch. You don't get a chance to, really hear what's going on, which obviously we do, being at the sort of cold face of the property world. And the guy said to me, he said, I hear there's a bit of a boom going on, or house prices are going up. What does that mean? Is it a good time to buy? Is it not a good time to buy? And I think to myself, God, don't you know this? And don't you read? But, when you're working in oil or you're working in finance, you don't look at the property prices, I guess. So I thought I'd just put it into context. Okay, and I thought, well, look where we are. And I had a look at something called the 18-year property cycle. Now, what is that? Well, basically, we looked at the micro level and we've had things like COVID, we've had the stamp duty holiday, we've had quantitative easing, we've had the frustration of Brexit, and people are coming out of all that and they're going, let's buy some property, let's move out, let's go to a nice place, let's get some bigger rooms that we can work in, let's have gardens and so on. And so that's sort of the micro picture, but the bigger picture is where are we? And the gentleman called, to get it exactly right, because he's an important economist, Fred Harrison. And he wrote a book in 1998, and he predicted the 2007-2008 crash. And he said it's part of the land price, economic cycle, debt cycle, commodity super cycle facts, that you put all this together, you can get certain cycles in the economy, and the house price boom and bust situation was one of those. And so he said in 1998 that there's going to be a financial crash in 2007-2008. It was called Boom and Bust, his book, and he argued the UK and US property markets follow an 18-year cycle, and to support this argument he showed 200 years worth of house price data, and he catalogued the market crashes of 53, 54, 71, 72, 89, 90, and they all support his claims. Okay, which is pretty amazing really. And he says how it works is you get a crash, then you get 3 to 4 years of recession, when lenders and investors withdraw from the market because they've got their fingers burnt, and then by the end of that people start to forget what it's all about and they go, well, was it that bad really? Perhaps we should try property again. And then you get a recovery phase when people begin to go back into the market and they get back into lending, and you get prices start to creep up for 6 or 7 years. And then you have, after that, you get a bit of a correction where people go, oh God, that wasn't such a great idea, perhaps I shouldn't do it. And the market wobbles a bit, and it starts to assess whether it's actually sustainable or not. And then you get your boom phase. And the boom phase is normally when you have the effect of government stimulus. And it then cracks on for another 5, 6, 7 years until you get the buyer's curse, or the winner's curse, which is in the last 2 years where house prices are going up strongly and suddenly everyone's seeing it. JP Morgan once famously said, 75% of people in the street buy in the top 25% of the market. And that's what happens at that point. So we look at that and we say, well, okay, where are we then in that cycle, if it's true? And I've analysed the figures and I've taken them from a variety of places like Property Hub, from the Nationwide Price Index. And basically what we have is, if you take the 2008 as the crash point, and we start then our 4-year of bottom feeding, or just bimbling along at the bottom as people withdraw from the market because they've had a hard time and the market doesn't recover because they've had their fingers burned. 09 we had 3.4% growth, in 2010 0.5, 2011, 1.1, 2012, less 1.1. So basically over that whole period, you're on an average of 1% growth or just below that over the period. And that's the very first 4-year part of the cycle, the recession part. Then you get into the confidence building part of that. And that started in 2013. We had a huge growth of 7.1% and 8.3%. And that's in the London markets mainly. They were doing all the heavy lifting and pushing. And then more modest growth after that across the country of 4.3 in 2015, 4.5 in 2016, 2.7 in 2017, and in 2018, 1.3%. So up to 2017, we had the confidence building, and in 18 and 19, we started having a wobble, which is what you'd standard get, a mid-cycle wobble. So over the confidence building phase, we had an average of 4.1% growth in property markets. In the wobble phase, we had 1.3% in 2018, and in 2019, 0.8%. Now, according to Fred Harrison, it's at this stage where governments look at it and they step in and say, okay, we've had a good run, we want to build that up and make it look a lot better. We want to make more money from this cycle. And also the other underlying cycles like house prices, affordability, land prices, they're all creeping in. Inflation has been eating away at debt, so things are becoming a bit more affordable, and then a bit of stimulus and it'll kick it off again. And as I said, involved with the other super cycles as well. So at that point, 2020, we should have had the first start of the boom. And 2020 was when COVID hit, and we had obviously a huge problem. But last year it went up by 6.4%, so 2020. And that, according to the 18-year house price cycle, is the first year of the boom. And going forward, we have another 5 to 6 years, which could be a fantastic time to be in the property market. I mean, it could be completely wrong, and COVID could have broken the cycle. We don't know. And I don't know the answer to that. But if you take for granted, or you take with a pinch of salt, that this 18-year cycle is true, which it appears to have been, and there's been many massive problems in the past that we've overcome, as bad as COVID. So what do? You need to make a decision, really. Do you think you should go into the market, and should you buy and participate in this boom, or should you not? But either way, you make a decision, and just sitting on the sidelines is not going to do anyone any good. So that really is the situation. Are we in the start of a boom? Is this a short-term sputter and it's going to burn out? It doesn't look like it now, does it? It looks like this year is going to be a good year. And I think with the super cycle of interest rates being low for so long going forward, that will really support it. And that's a government stimulus. And inflation is going to go up, but it won't go up in such a way that it will force interest rates to go up quickly. So it would appear we're getting into a good part of the 18-year cycle. Do try and get Mr. Harrison's book, Boom and Bust. You look on lots of websites, you'll find information about it. It's a very good read. Where are we? Work it out for yourself. That's it for this week. Please like, share if you can. Press the little buzzer thing to make it happen every week rather. Thanks very much.